Hello everybody, welcome back. It is my favorite series that I do on the channel, and it is of course my portfolio updates that I do every single month where I share my buys, my sells, my dividends, how my investing strategy has changed, and so much more. This has definitely been an interesting month. This series has been an amazing way for me to track my portfolio and document my progress and my journey as an investor. You could look back almost 3 years ago now, year to date, and look at my first ever portfolio reveal update that I did. It's really wild to see how I've changed since then as an investor and as a person. As per usual, also another amazing thing I love about this series is that it promotes transparency, something a lot of big finance channels like Jeremy can't really do. They like to only show you the good things, and especially when at a time when the S&P 500 quite literally is trading at all-time highs, it's very easy to do that and only show the good things. But in this series, I show the good things and the bad. With all that out of the way, make sure to check out the Dividend Stocks Not Drugs merchandise. It's the best merchandise for any real man's investor who actually shows their portfolio to the public. Thank you, and roll the intro.
I like money.
So currently the portfolio's total value, which includes cash, is $22,872.85. From last month, that is up over $500. Once again, to be transparent, I recently deposited $205 into the account as cash today, so we have about $300 in gains that we're standing on this month. Yes, gains are cool, but I talked about it in my monthly newsletter, which is available to channel members, link in the description. I basically talked a whole lot about why I personally don't like when stocks go up. For me, I actually really love when stocks go down. And right now, this is the most amount of cash that I've ever really been sitting on in the portfolio. And I see what it means now when they say the hardest thing to do in investing is just wait and do nothing. Recently, I've been conserving my cash very well in my opinion, and currently my portfolio is only made up about 5.5% of cash. But regardless of the stock market's conditions, there are always amazing businesses that can be at fair prices, and that's what I try to look out for this month. I'm going to continue building up my cash position, but I'm not afraid to buy stocks still, even at all-time highs. I still think it's very foolish to try and time the market and wait on the sidelines and lose out on potential long-term compounding and gains. I don't lie in these videos, guys. I am Mr. Transparency, and I say that 100%. That even means that I'm underperforming the S&P 500 since November 1st. Whoa, shocker. But believe it or not, unlike other finance channels, I don't really care about 3-month performance. For me, it becomes alarming when it's 10, 20, 30-year underperformance. I still think my current strategy of buying amazing quality businesses with all the characteristics that you want to look for, buying them at reasonable prices and holding for a very long time and reinvesting your dividends will set me up to be in pace and even outperform the S&P 500 over a long-term time horizon. This is going to take decades to kick in, but I still believe in my original investment thesis. But ever since really the bottom of the bear market, our portfolio is up 15.26%, and that is not total return, while the S&P 500 is up 21.73%, above about 6% of my portfolio right now. Now, the reason for this, one, Nvidia, it's absolutely ridiculous what's going on with that right now, and I think eventually that will correct itself. But also, I have some holdings in my portfolio that are definitely nagging the portfolio. These are companies I am looking to get out of eventually, and I'm still doing some portfolio reconstruction as recording this video. There are some holdings like NextEra Energy, 3M, maybe even Disney, that I'm reconsidering my holding in long term. More 3M and NextEra Energy though. There are also some companies that my thesis is very long-term based, and there's going to be some short-term underperformance, and I'm completely accepting that right now. Companies like Altria, but I am no way concerned whatsoever with this short-term underperformance. I actually think it's really foolish to look at a performance like this on a 3-month time horizon. But you guys requested it, and of course, I have to be transparent with you guys. When it comes to the buys this month, it was honestly a really boring month for my portfolio. But sometimes doing nothing is the best thing and really tests me as an investor. So this month, I pick and chose my spots. We can see this month overall I bought 5 shares of Vici total, 2 of those shares being at $29.86 and 3 of those shares being at $29.02. As Vici continues to fall, potentially below the $29 range, I will continue to add. Vici has quickly become one of my top dividend payers in the portfolio and a core holding. Overall, I love Vici's business model so much, and it not only offers me solid dividend yield, but quality growth potential as well in my opinion. Interest rates are really the only thing that are hurting this company right now, and I believe they'll be a short to medium term issue. There's also another company that's a REIT that I'm keeping my eye on, and that's Realty, not Realty Income, of course. Realty Income is not the greatest REIT, I'll completely admit that, and there's limited growth ahead of it. But I will say this, at these prices and as interest rates continue to fall and macroeconomic conditions impact the company's stock price in the short to medium term, in my opinion, I think it really offers an attractive price for Realty Income. I'm looking to buy Realty Income in my portfolio. If it goes to $48, $47, that would be a price where I couldn't say no. And I've been accused of trying to time Realty Income, and I still view it as a long-term holding in my portfolio for sure. But I will say this, if Realty Income were to go to $65, $70, $75, I would just sell out of it. I've realized it's not the best thing to own in my portfolio, but I still think at these valuations it offers solid value for me at these prices, and I'd be happy to be paid to wait. With Vici, though, in my opinion, it's different. I believe that Vici is stronger qualitatively, and there's a lot more growth ahead of it, and it still offers that yield as I mentioned. And the next buy and the last one for the month, I put $35 in S&P Global at $423. In my opinion, I thought this was a decent price to buy some more S&P Global. It's been on a bit of a decline as of recently. It's still way above my cost per share at the $350 range. If you guys are channel members, you would know a whole lot about S&P Global from my monthly newsletter, but S&P Global recently actually did an underwhelming dividend hike of only 1%. Other financial companies in the sector as well were doing lower dividend hikes, but I believe a big reason for this is that S&P Global is making a whole bunch of investments in acquiring new data companies. This will only widen their moat in my opinion and add to shareholder value over the long term. As a dividend growth focused investor, as I like to say myself, I'm not really alarmed over the short-term dividend underperformance, you could say. But S&P Global is still producing large free cash flows, and I'm very confident over a long-term time horizon, this will end up just fine for me. I'd love to build up my S&P Global position, but again, it has to be at the right price. I got in a really good cost per share. Moving on to the dividends for this month, and this month was not the greatest month when it comes to dividends, but I will say March is my big month. To start the month off, I got $10.75 from the pharma giant AbbVie. AbbVie is currently trading at all-time highs, and I'll be completely honest with my AbbVie position, guys. I think it's one of the companies in my portfolio that I have the least circle of competency around. It's really hard business to understand, as all pharma companies are. I'm actively doing more research on AbbVie and trying to understand the business more. But financials, execution, and management don't lie, and AbbVie has all of those, and they've been an amazing performer for me as of late. The next company is Apple, and I got $2.19 from Apple. Thank you very much, Apple. Apple's dividend growth is pretty underwhelming, but their share buybacks are absolutely insane. If you guys haven't already checked it out, I made a recent Apple video, and I go way more in depth on it, but I think it could potentially be at fair value right now. I'll reinvest that whopping $2.19 right back into Apple. I reinvest all my dividends, by the way, for clarification if you're new to the channel. Next, I got my monthly $4.28 from Realty Not Reality Income. Happy to reinvest that dividend back at these low prices. Next, I got a whopping 38 cents from Costco. That's a step down from the recent special dividend I got last month from them, but still, I'll take it from Costco. Costco's another company. The only thing bad about it, in my opinion, is its valuation. It seems to always be trading at all-time highs. I remember when I started my position at $530, I thought it was overvalued then. Now it's in the $700 range. Absolutely insane with Costco. Next, I got $10.64 from Starbucks. I could buy like half a Starbucks drink with that. But once again, Starbucks is one of the favorite companies in my portfolio. It's a core holding. I love what they're doing. I recently got a comment on a video that Starbucks' brand was dying, and I just think that's absolutely wild and just factually incorrect. Starbucks' brand is at an all-time high right now. I love Starbucks as a company. I have an entire playlist of me rambling about why I love the stock so much, so go check that out if you're interested. And lastly, thank you Schwab. I got 58 cents in interest. I'm going right to the bank with that one. But this month, overall, we got $28.82. Not my greatest month, but not my worst. So I'm very happy. It's $28.82 I didn't have last month. As I continue to do portfolio reconstruction and buy in and out of companies and try and make my portfolio as lean and quality as possible, my dividend income month to month may vary a little bit. But overall, I'm really trying to make a concentrated focus on just buying amazing companies and doing it over again. But right now with these valuations, it's kind of hard to do that. But I'll take what I can get. I'm not against buying a great company at a fair price. You guys already know that. I want to thank you all for making it to the video. I love doing this series and sharing my portfolio with you guys in a transparent manner. Once again, something a lot of finance channels won't do. If you appreciate that fact, make sure to smash the like button for me. Subscribe, turn on post notifications, check out dividenddata.com, the investing software that I use for all my data. Thank you guys, and do dividend stocks, not drugs. Have a good one.